If you bought a house in Canada right here at this time, it was the worst possible time you could have bought a house. Roll things forward just one single year, and look how much home prices have dropped. 10% in a single year. Think how much money you could have saved. Why don't we go forward just a little bit more to see how much better things could have got if you waited even just a little bit longer. Oh no. And this is what happens if you try to time the Canadian real estate market and get it wrong. I'm going to show you how to get it right. Hey there, and welcome back to Prairie Real Estate. My name is 𝗳𝗶𝗍, real estate agent in Regina, and that is my trusted assistant, Matilda. I get asked all the time by home buyers, is now the right time to buy a house? They're wondering if prices are increasing, should they buy now before they get priced out of the market? Or they're saying, I'm going to wait until the real estate market eventually crashes. So in this video, I'm going to break down the trends in the real estate market that you want to watch and give you the secret superpower that other real estate agents, they really don't want you to know, because they want you to buy a house right now so they can get paid right now. And if you watch these trends, you're going to know how to perfectly time the real estate market. Make sure you stick around in this video, because at the end, I'm going to give you the one piece of advice I give all of my buyers on how to perfectly time the real estate market. But of course, this wouldn't be a Prairie real estate video without another one of my terrible bad dad jokes. Why are Saturday and Sunday the strongest days of the week? Because the rest are just weekdays. If you have a terrible joke I can use in the future, put it in the comments below. Let's start off by talking about the three different types of market conditions and how they impact home prices. You've got a buyer's market, a balanced market, and a seller's market. And these names are a little bit counterintuitive. In a seller's market, there are more buyers than sellers, and those buyers are competing, bidding up home prices higher. In a balanced market, you've got about the same number of sellers and buyers. Neither has any significant leverage over the other, and home prices generally don't change very much. Then in a buyer's market, you've got more sellers than buyers, and those sellers are competing, which usually drives down prices overall, giving buyers more leverage. But in a buyer's market, there's actually not really many buyers actually buying. In order to properly time the real estate market, you've got to know which trends to watch and which ones signal the best time to buy. Now, if you go ahead and book a buyer's consultation with me, that's going to be neither misleading or confusing. If you're looking to buy a house in Regina or you're moving to Regina, I would love to be your real estate agent. But if you're somewhere else in Canada, don't worry, I've got you covered, because I've got great realtor recommendations in every single city in Canada. If you look in the description of this video, there's going to be a link to my calendar where you can book me in for that buyer's consultation. I'd love to chat with you. If you want the leading indicator for the Canadian real estate market, the canary in the coal mine per se, this is probably it. Sales to new listing ratio. Very simple, how many sales are happening versus how many houses are put up for sale in the same month. If you have more sales than new listings, that's generally going to result in lower active inventory, driving up prices. And if you have the opposite, more new listings than sales, that's going to mean more inventory overall, and probably prices will start declining. If the sales to new listing ratio is below 40%, that signals it's a buyer's market. Between 40 and 60% means it's a balanced market. And if you have a sales to new listing ratio above 60%, that signals a seller's market. Next up is the sales to active listing ratio, exactly how it sounds. How many houses sold a month versus how many were for sale. And the theory goes, if the sales to active listing ratio is consistently below 12%, that's going to put downward pressure on prices. If you see that sales to active listing ratio between 12 and 20%, that's typically considered a balanced market. If it's consistently 20% or higher, that signals a seller's market. Another metric you can watch is months of inventory. I use this all the time in my monthly Canadian real estate market update videos. And the idea is, if there were no new listings, how long would it take for that real estate market to run out of houses that are available for sale? If you have less than 3 months of inventory, that's considered a seller's market. Between 3 and 6 months of inventory, that's going to be considered a balanced market. And if you have more than 6 months of inventory, that's when you got a buyer's market. I want you to view these metrics as a trend though, and not as a hard and fast rule. Just because the metric says it's a buyer's market doesn't mean it actually is. Here's a real world example. Let's look at the Toronto real estate market in April of 2022. That date is going to become very important as we go through this. If you look at the sales to new listing ratio, that showed 44%, meaning we're a balanced market leaning towards a buyer's market. Yet if you looked at the sales to active listing ratio, that was 52%, meaning a strong seller's market. And then if you looked at the months of inventory, well, that was 1.4, also meaning a very strong seller's market. In a vacuum, this would probably be fairly confusing. 2 out of 3 of these indicators show a strong seller's market. And yet at that exact same time, home prices dropped $30,000 in Toronto and had actually dropped in the 2 previous months. But as I pointed out, the sales new listing ratio was kind of a leading indicator of where the market was going. And that's why it's best to track these metrics more as trends versus one-off events. You have to remember as well, seasonality will play into these trends as well. You're going to see generally a stronger market in the spring and it'll soften in the summer and the winter. So if you're watching these as a trend and you see things starting to soften in the late spring, that could be just seasonality and not a true market shift. But if you see something that's very much out of the ordinary, say a softening in these metrics in the spring market when things should be tightening up, or things tightening up in the summer and fall months when things should be slowing down, that should get your attention. Okay, so watching these trends is great insight in the real estate market, but it's not going to help you time the market perfectly. If you follow this advice right here, well, then you're not only going to time the real estate market perfectly, you're also going to buy a great house. I'm going to call this the 3 check boxes to perfectly timing the Canadian real estate market. And if you can check off all 3 of these, you're going to time the market perfectly. First, we got to talk about your employment. Do you have job security, stability, and you're not going to get transferred anytime soon? If the answer to that is yes, go ahead and give yourself your first check mark. Next, do you have your down payment, closing costs, and a little bit of reserve money already saved up? Here's a pro tip. Make sure you have this money saved away in some sort of investment fund so you can actually see this money grow, supercharging your savings. If you answered yes to this question, go ahead, give yourself the second check mark. Now, in order to get this final box checked, we're going to talk about your lifestyle a little bit. Buying a house is a lifestyle choice, but it's also a lifestyle sacrifice. And so here's some things I want you to think about. Are you ready to set down roots? Do you want to start a family? Are you ready to take on the maintenance and costs that owning a home will have? Maybe are you wanting that stability that homeownership has that renting doesn't necessarily always have? Just think about those for a second here. But this is what I think is the most important. Well, buying a house, improve your lifestyle. Because if buying a house is going to be a lifestyle sacrifice, it better be worth it. If you now have all 3 of these boxes checked off, when it comes to perfectly timing the real estate market for your specific situation, it's the perfect time. Because in my opinion, if you're just watching those real estate market trends and waiting for them to all line up, you have a massive blind spot. If you're trying to perfectly time the bottom of the real estate market when prices bottom out after a crash, you don't know it's the bottom until after it's passed you by. That perfect house that fit all of your needs probably isn't for sale anymore. If you have to keep moving because your rent went up or the landlord wants to sell the property, that's an added expense to you. Or you're going to delay starting a family waiting for all those metrics to perfectly line up, if they ever do. So I'm going to let you in on a little secret. There is no perfect time to buy a house. You can't time the market. You perfectly time the real estate market by buying a house when it makes sense for your individual situation. No market trend or YouTuber can tell you when that is. Only you can. If you have found this video valuable, please give it a like, and I hope I've earned your subscription. If you're a first-time home buyer and want to know about what I think are the top 5 mistakes that first-time home buyers make, check out this video right here. And if you want to know what's going on in the Canadian real estate market, here's my most recent monthly Canadian real estate market update. Thanks for watching. Good. Battery's dying. Perfect time.